This is interesting. Okay, so this is some price action speculation, and we're not really endorsing this clip by playing it here, but it is a good conversation fodder. So this is about a minute and a half, and we'll watch this clip now.
Does this one chart explain why Bitcoin won't go up? Everyone thought that BTC would be at 200K by now. But according to Jeff Park, we're not going sideways because OGs are trading their massive stacks for Lambos and islands. It's because they're yield farming their Bitcoin with options. Let me explain. Some describe this strategy as picking up pennies in front of a steamroller. Rather than sell their Bitcoin, these early holders are selling covered calls. Think of a covered call like renting out your Bitcoin. They collect cash, call a premium, right now. But in exchange, they're forced to sell their coins if the price shoots up past an agreed upon level. These whales get steady income while Bitcoin churns, but if it rips, they gotta hand over the coins. Jeff Park found a massive divergence in this chart. On the ETF side with IBIT, buyers are paying huge premiums on upside calls, meaning they are betting on a rally. But on the Bitcoin native side, large holders are aggressively selling those same calls to earn yield. Why does this kill the price action? Because market makers are on the other side of these trades. When OGs sell calls, market makers buy them. To protect themselves as Bitcoin price tries to go up, market makers are mathematically forced to sell spot Bitcoin to hedge. It acts like a wet blanket on price. Volatility gets crushed and we go nowhere. Some argue that this is all just spot selling, but spot selling doesn't explain why every single rally feels like it's mechanically capped. The bottom line, the biggest whales don't care about 200K. They're happy to extract value from Bitcoin at 100K. Until that supply dries up, Bitcoin stays a sideways market. The engine is running fine, but the parking brake is on. So what do you think? Does this actually explain the last couple months of Bitcoin price action? Hit that like, share this thing.
Yeah, so I think it's an interesting take. Again, this goes back to the scoreboard thing, right? This is like, Monday morning quarterbacking. This is like a, ESPN style, like speculating on things that are going on here in the price. It doesn't matter, right? Right now, it doesn't matter. What matters is that long-term time horizon, but it is still fun to guess at and try to figure out what's going on with price action, the motivations, the mechanisms behind it. And this is a trading strategy, and we've talked a lot. I mean, Bitcoiners have talked a lot about OGs this year, selling as a way to put price pressure on price. And this is an interesting idea where OGs aren't, necessarily selling right away. They're selling covered calls or buying covered calls in order to get some cash, and they're fine. If Bitcoin rips past that price, they'll sell the coins. But if they don't, in the meantime, they can generate some cash flow. So it's interesting. It's really the kind of two sides of the same coin. It's OGs kind of playing with their massive stacks. And, I can imagine if I bought a whole bunch of Bitcoin in 2011, 2012, 2013, and I've been sitting on that stack for a long time with that 10-year time horizon, and it's now, 12 years later, and I've sort of had this number in my mind. I've got tens of thousands of Bitcoin or 10,000 Bitcoin. At $100,000 is when, it starts to make a lot of sense for you to kind of cash in on that conviction. And so I do sort of buy in on that theory that, OGs have targeted this number for a long time and are trying to diversify or cash out from Bitcoin a bit. We're talking millions and billions of dollars. Some of these wallets that have been moving coins are worth billions or $1 billion or more. So yeah, it's a lot of money to play with. You don't need to sit on it any longer at that point. So you're motivated to, like I said, cash in on your conviction, get your reward for hodling all that time.
Yeah. And just to add to that theory of it is OG covered call selling on Bitcoin leading to the price being suppressed or at least range bound. There are other people like Checkmate, for example. He doesn't really believe that theory. He thinks it's much more spot selling that is causing the price to not be what we all kind of thought it would do this year. No one has a monopoly on the answer there. You're looking at open interest and options. You're looking at exchange balances and things like that to try to come up with the answer. So no one's going to have the answer. So yeah, just wanted to highlight that as some people think, and I actually think I read a response where Jeff Park said, yeah, I'm not saying it's all due to covered call selling. He says it's just a factor. So there's nuance here.